Right now, as you watch this, something unprecedented is unfolding in global markets. On December 11th, 2025, silver prices surged past $63 per ounce, levels we haven't seen in modern trading history. The mainstream media is calling this a rally. They are calling it inflation. They are wrong. This isn't a market rally. This is a siege. On October 30th, China's Ministry of Commerce quietly announced new export control measures on silver. Starting January 1st, that is just 3 weeks away, silver exports leaving China will require strict government approval. This explains the explosion to $63. But here's the critical part. Analysts believe $63 is just the panic buying before the door shuts. Once the restrictions go live in January, the supply chain for Western tech companies effectively breaks. We are looking at a trajectory that targets $75 per ounce within the first quarter of 2026. Why? Because China knows exactly what they are doing. They aren't just raising prices, they are restricting the lifeblood of the American AI and defense industries. In the next 12 minutes, I am going to walk you through the 3 historical patterns that prove this is a calculated act of economic warfare. I will show you why your smartphone, your EV, and your investment portfolio are about to feel the impact of this silver curtain. The price is racing to $75, not because of speculation, but because the world's factory is closing the sales window. I know what you're thinking. China wouldn't actually cut off silver. It would hurt their own economy. This is just a negotiation tactic. Let me tell you why that is a fatal miscalculation. When I studied the history of resource wars, I found that this exact scenario has played out 3 times in the last 200 years. It follows a specific 4-stage pattern, and we just slammed into stage 3. Stage 1 is dependency. A dominant nation, the US, builds its critical infrastructure around a resource it doesn't control. For the last 20 years, the West was happy to let China handle the dirty work of refining. We sent them the raw ore, they processed it, and we bought back the pure silver for our iPhones and missiles. We assumed access would always be cheap and unlimited. Stage 2 is weaponization. The supplier realizes they hold the keys to the kingdom. This happened on October 30th, 2025. China announced the export controls. They didn't ban silver outright, they just added administrative friction, quotas, licenses, security reviews. It's a soft chokehold. Stage 3 is crisis. This is where we are right now. The market wakes up. Inventories in Shanghai drop 40% in 3 weeks. Western mints sell out. The price explodes from $30 to $63 in a year, and now the smart money is front-running the inevitable climb to $75. Why $75? That is the price where the pain becomes unbearable for Western industry. Stage 4 is realignment. This is the end game. The dependent nation, US, is forced to either pay the ransom or spend a decade rebuilding domestic factories. History shows that by the time the factories are built, the geopolitical damage is already done. This isn't just about silver. Silver is just the first domino. We are tracking the next minerals on the chopping block. We are racing to hit 1,000 subscribers by December 31st, 2025. If we hit that number, I am going to release the killer video, the classified list of critical minerals that intelligence agencies believe China will restrict next. I want to publish it, but I need 1,000 insiders to justify the risk. So hit subscribe. Now, let me show you the historical precedent that proves this strategy works. To understand why this is happening, look at the decline of the British Empire. In 1870, Britain was the workshop of the world, just like America was in the 20th century. But by 1900, Britain had made a fatal error. They relied on German steel to build their battleships. For decades, it worked. German steel was cheaper. But as geopolitical tensions rose, shipments from Germany started to experience unexplained delays. Quality inspections took longer. Prices tripled. By 1914, when war broke out, Germany's steel dominance translated directly into military superiority in artillery and submarines. Britain survived, but they lost their industrial crown forever. China remembers an even harder lesson. In the 1800s, China was the world's economic superpower. They produced everything Europe wanted: tea, silk, porcelain. But they demanded payment in silver. Europe was bleeding dry. So the British Empire flipped the table. They flooded China with opium to drain the silver back out. When China tried to stop it, the British Navy invaded. China has never forgotten the century of humiliation. They learned that he who controls the critical resource controls the world. Today, they are flipping the table back. But instead of opium, the leverage is the refined silver required for the 21st century economy. They aren't repeating history. They are reversing it. And this time, the United States is the one caught in the dependency trap, scrambling to secure the metal needed for its own defense systems. So, what exactly did China do on October 30th? They didn't declare an embargo. They did something smarter. They reclassified silver under the dual-use technology framework. This means, starting January 1st, any silver leaving Chinese ports requires a national security review. It sounds boring, but it is lethal. It allows Beijing to delay shipments for weeks, deny licenses to unfriendly nations, and effectively trap the metal within their own borders. The market reaction was immediate. We're seeing a phenomenon called the Shanghai drain. Reports suggest that silver inventories in Shanghai have dropped 40% in just 3 weeks. But here is the catch. That silver didn't leave the country. It was moved from public exchanges into strategic state reserves. This has created a massive price disconnect. Right now, inside China, buyers are reportedly paying premiums of $108 to $128 per ounce for physical metal. That is nearly double the global spot price. In a normal market, traders would buy cheap silver in London and fly it to Shanghai to profit. But they can't. The arbitrage is broken because the metal is being hoarded for domestic industry. Meanwhile, the London Metal Exchange, LME, is bleeding dry. Western institutional players see the dam closing. They are placing orders for 350 million ounces for immediate delivery, trying to get the metal out before the January 1st deadline. This is why the price is racing toward $75. The global price is trying to catch up to the real price inside China. The dam is closing, and the water downstream is drying up fast. Why does China care about silver? Because they know it is the one element that connects every strategic industry of the 21st century. They aren't squeezing jewelry makers. They are squeezing the Pentagon and Silicon Valley. Let's look at the AI boom. Everyone is talking about NVIDIA chips and data centers. But those servers generate massive amounts of heat. To manage that heat and ensure high-speed connectivity, you need silver. It is the most conductive metal on the periodic table. Industry forecasts suggest the AI sector alone could consume 200 million ounces by 2030. Without silver, ChatGPT slows down. Without silver, the data centers overheat. Now look at defense. A Tomahawk cruise missile, a fighter jet radar system, a nuclear submarine guidance computer. They all rely on silver-coated contacts that won't corrode. The US military reportedly consumed 15 million ounces in 2024 just to maintain readiness. And here is the fatal flaw. The United States mines only 14% of the silver it uses. We are 86% dependent on imports. But wait, you say, China only mines 6% of the global supply. We can just buy from Mexico. Wrong. While Mexico mines the ore, China dominates the refining capacity. They are the ones who take the raw dirt and turn it into the high-purity 0.999 industrial bars that Tesla and Raytheon need. For decades, we offshored the dirty business of refining to China. Now, they are shutting the factory gates. We have the raw ore in the ground in Nevada, and we have the ore in Mexico. But we lack the industrial infrastructure to process it at scale today. And you cannot build a refinery in 3 weeks. So, the United States is effectively a tech hostage. Our most advanced industries are dependent on a supply chain that our geopolitical rival just decided to nationalize. And that is why the price target isn't stopping at $63. So, where does the price go from here? The mainstream analysts are predicting a slow drift to $68. They are wrong. They are looking at charts. I am looking at the arbitrage. Right now, there is a massive price gap in the global market. In New York, COMEX, the paper price is $63. But inside China, Shanghai, the real price for physical metal is reportedly over $100. This creates a vacuum. In economics, this is called an arbitrage loop. Physical metal always flows to the highest bidder. Traders are desperately trying to buy silver in the West at $63 and move it to the East to sell it for $100. But remember the dam? The metal can go in, but it can't come out. China is sucking the global market dry. Here is the inevitable outcome. To stop the entire world's silver supply from vanishing into Chinese vaults, the Western price must rise to match the pain threshold. The London price has to get high enough to convince miners to sell to the West instead of the East. My analysis suggests that the floor, the minimum price needed to stop the drain, is approximately $75 per ounce. This isn't a bubble. This is a repricing of reality. We are moving from the paper era to the scarcity era. By the end of Q1 2026, I believe $75 will not be the ceiling. It will be the new baseline. This brings us to the core question. The media calls this a trade dispute. I call it a siege. I want to know what you think. Is this just a trade war over tariffs, or is this a resource war for the future of technology? Go to the comments and type one word: trade or resource. I want to see if you understand the gravity of what is happening. So, what happens next? The United States has only 3 options to deal with this blockade. None of them are cheap. Option 1, pay the ransom. We accept that the price of silver is now $75, $80, or $100. Industries pass the cost to you. Your iPhone gets more expensive. Your EV gets more expensive. Inflation spikes again. This is the path of least resistance, and it is the one we will likely take first. Option 2, beg for help. We try to source metal from Mexico, Peru, and Canada. But remember, those countries are already at maximum production capacity. And guess who is sitting there with a $3 trillion checkbook outbidding us for every ounce? China. You cannot friendshore a resource that has already been bought by your rival. Option 3, rebuild at home. We build our own refineries. We open our own mines. This is the only sustainable solution. But here's the problem. In the US, it takes 10 years to permit a mine and 5 years to build a refinery. The export ban starts in 3 weeks. We are trying to build a fire truck while our house is already burning down. This brings us back to our mission. This isn't just about silver. This is a systematic campaign. If Washington doesn't respond decisively, Beijing moves to the next mineral. And we know what they are. We are racing to hit 1,000 subscribers by December 31st, 2025. If we hit that number, I am going to release the killer video, the classified list of the next critical minerals, like antimony and tungsten, that intelligence agencies believe are next on the chopping block. I want to publish it, but I need 1,000 insiders to justify the risk. January 1st is the deadline. The story is just beginning. You can ignore the geopolitics, but you can't metapply. Cannot ignore the price at the pump or the price on the chart. The era of cheap resources is over. The era of resource warfare has begun. Make sure you are on the right side of the trade. Subscribe. Turn on notifications. Class dismissed.